welcome. You're watching The Money Show with me, Kavita Thapliyal, and this is a year-ender special edition that I've got today. And on this show, we will be doing a roundup of 2023 in terms of fund categories and fund performance. And for this complicated task today, I have with me Anand, Deputy CEO, Feroze Azeez. Feroze, hello and welcome to this very special show. And although it's a very complicated task, or maybe it is not for you, you being an expert, the market this year has touched new highs. We'll be analyzing the mutual funds performance, category performance, and I believe you have a list where you will be grading out mutual funds which have given the hit performance and funds which have not done so well and can be considered as flop, just considering this 1 year's time. So just to give a background, as you also know, and the viewers also must be knowing, that Nifty small cap has given slightly above 40% return, mid cap 30%, 38%, and as compared to Nifty 50 going around 12%. As per Amphi data, if we talk about fund categories, mid cap and small caps have really been hit over here. 23 small cap schemes have given somewhere more than 32% return. 28 schemes of mid cap has given somewhere around 28-ish% or 30% return, whereas large caps around 15%. So talking about fund categories, clearly mid-cap and small caps have been a hero over there. But we also have to analyze and dissect the kind of strategies and stock picking that fund managers have also done. And also, just for viewers, we are just analyzing 1 year's performance. This discussion or this show theme doesn't mean that, the funds which have not done really well, you need to exit those funds. We will elaborate more on this during the end of the show, but then let's begin. Feroze, I think let's start with large cap category.
Yes, Kavita, you're absolutely right that there are funds which have done very well. It's been a very eventful year. If you look at Nifty, it doesn't tell the full story, but the broader markets tell you a big story from a sector divergence perspective also. Some sectors have done phenomenally well. Some sectors have not done so well. You see cement, infrastructure, capital goods doing phenomenally well. On the other hand, IT, banking have not done superb in terms of the full calendar year. So I think it's been a very eventful year, but the headlines hide more than they show.
All right, so let's begin. And large cap category is what I think we should be beginning with, where you have, as compared to mid cap and small caps, so we will not compare those performance category wise, but then within the large cap category, funds that were hit and funds that were flop.
Right. So this is just on the basis of past performance. It's a very easy task because it's very clerical in nature. But I'll tell you the two best ones for the calendar year have been Nippon India Large Cap and HDFC Top 100. They've delivered about 27 and 24 respectively. On the lower side, the worst ones have been in the same category, Axis Blue Chip and LIC MF Large Cap Fund. Both these have given returns in the range of 13% odd, which is half the return of the best one, which is Nippon Large Cap, which is 27. So two misses, two worst ones for the year. Of course, not from a prospective standpoint, but retrospective standpoint, this is where it stands.
I was talking about Axis Blue Chip. This has been a non-performer since a very long time. Even before large caps were not performing, there has been a consistent non-performance.
Yes, Kavita, if you look at our model portfolio, Axis Blue Chip was a part of it. I think in May 2021, if I remember right, we exited this fund, lock, stock, barrel for our clients, because it was from a future standpoint. We a couple of years back knew that this is going to be Lagarde, so that was out of our model portfolio. It did very well and did justice to investors' monies, but not for the last couple of years. And incidentally, God was kind that we got a great exit from our model portfolio for this scheme.
Looking at the way large caps have performed Feroze, Nippon India Large Cap, where we see 27% return, and HDFC Top 100, 24% return. What selection do you think actually worked for them? Especially HDFC Top 100, what kind of a theme, as in is it a value-based fund that we are talking about, that strategy worked for them?
Yes, Kavita, you've pointed me in the right direction. It has been value. I
Yeah.
think Prashant Jain, who's no more the CIO of HDFC, had inculcated over the couple of decades of his being the CIO, a value principle for all the schemes. When he had actually moved out, we analyzed whether all schemes consistently follow a value principle, and most of the portfolios were cheaper in terms of value vis-a-vis their peers. So value is an ingrained DNA for HDFC, and the last couple of years, value has played out, and HDFC has done phenomenally well, undoing the previous 5 years underperformance in several categories. So yes, so value played out beautifully, and Nippon large cap is not so much of a value fund, but I think their agility has been good. If you look at Nifty itself, there are 3 stocks above 100 PE, 11 stocks above 50 PE, whereas the overall PE of Nifty is 2021. So that implies that there is divergence in performance in the Nifty 50 stocks itself. And I think that's what divergence is what Nippon has capitalized on to remain number one for some time now for the last couple of years.
All right, so that's been the large cap story, but then we have a long list over here. Feroze, let's quickly move on to large and mid cap, where the returns were taken up mainly due to mid caps in this particular category. So, what funds on your radar?
Also, these are only on the basis of past performance. So, from a future standpoint, I might have something else in the radar. But Motilal Oswal large and mid cap is the one which has been the best for the calendar year so far, 34.5%. And large cap, HDFC large and mid cap is the one with 32.8. And you see Canara Robeco emerging and Tata large and mid cap funds at about 18 to 20% return. So you see the dispersion is not as much as in the large cap, but still a 14-15% difference between the top two and the bottom two, in spite of being in the same category.
What's the category exposure in these funds when it comes to having exposure in large cap and mid cap?
See, I think in a year like this one, large and mid cap is going to outperform large cap because it's been a
Totally.
broader market rally, unlike the last few years. So if the broader market rally continues, which is likely to, if governance or government continues, mid cap and the broader market should continue the outperformance. So this category has a large potential with a 90% chance to beat the large cap standalone.
Okay, let's talk about the border markets and the universe where the fund manager has a lot of flexibility. Mid cap and small cap. So let's take mid cap first, Feroze. So choosing the best among the best.
Yes, so in the mid-cap category, Nippon India Growth One has been the best one with 42.67, and JM Mid-Cap is another one with about 42% return. The worst one, again, from Axis is stable, is Axis Mid-Cap, and PGIM India Mid-Cap are the two worst funds for the calendar year 2023. So it clearly indicates now, if you look at the returns between the third
Right.
category we read out, it's different, significantly different and larger in mid cap. And you would have noticed that we also went very bullish on large and small, mid cap and small cap
Right.
on your show. If somebody was a ET Now viewer, would have caught
Right.
this much before the rest of the world did.
Exactly. Exactly. Feroze, what according to you must have worked out for Nippon India and JM Midcap? And also talking about Nippon India Fund House, I think the list that you have shared, maximum best performing funds have been from Nippon India. So we'll talk about the fund house and their strategy and their stock picking later on. But then talking about just Midcap, what do you think, what kind of selection do you think worked for these two funds, above 40% return?
See, mid-cap as a category, of course, the fund manager is very important. The CIO is very important. Of course, Manish Gunwani was the CIO till some time back before he moved on to Bandhan Mutual Fund. But Sailesh Rajbhan, who's now the CIO of Nippon, has been the same company for about 20 years. So they have had a very good principle of bottom-up stock picking, that which is very important in the mid-cap space, and also have had the courage to implement out of the box ideas in their portfolio. So I think courage and bottom up stock picking is what I would at least attribute this performance to.
Feroze, specifically Axis Midcap and PGI Midcap, what kind of philosophy or theme these funds have, which actually does not reflect in their performance also this calendar year?
See, I think Axis has a very different story. I think it went into a redemption cycle, which automatically means that the stocks which they own, they have to sell. When an institution sells in a mid-cap space, they itself have a large impact cost. So when they when liquidity dries up in the stocks which you are there and you're trying to sell and you don't get those block deals, so you sell it on the screen, you try and spiral, you incidentally spiral your own stocks down. I think that redemption vicious cycle has definitely impacted Axis's performance, because if a fund manager is getting a net redemption every day, he or she is not going to be managing too much money, but worrying about how to create the liquidity. So you don't have money, fresh money to allocate to newer ideas, but you're just wondering how to exit and pay back the redemptions which are coming. So I think that's what unfortunately happened to Axis, at least for this year, or the last one more specifically.
Let's move on to small cap, where we've seen returns beyond 50%. Feroze?
Yes, on 3rd January this year, we went hammer on tongs on small caps on your show as well. If I remember the date right, I think small cap, it was very apparent to naked eye that for the previous 5 years, leaving this year, small caps underperformed Nifty by 4.87% compounded for 5 big years. And that's not a usual phenomena. Whenever such a phenomena happens, you see that was a calm before the storm. And that's when we went from 5-7% in our model portfolio to as much as 30%, increasing the weight 4 times of small cap. And that played out, and that was it was visible to naked eye, or was writing on the wall. And it was not something we claim credit to, because that was easy to spot. And I think that's what has panned out. And 50% kind of a return is not very unusual. 2017 was another year. 2014 was another year. So every 3, 4, 5 years, small caps give you a catch up and a mean reversion. That's what has happened. And in that space, smaller funds have been able to capitalize and use this agility for themselves. So Mahindra Manulife Small Cap Fund and Franklin India Small Cap Fund have done beautifully with 50 and 47% return approximately, respectively. SBI Small Cap has underperformed significantly and has only a 24% return. This one is a surprise to me, because SBI should have spotted this rally. I think a little degree of pessimism in the fund manager with respect to small cap itself has resulted in them being the bottom two. And PGIM Small Cap Fund is also a small fund which had the opportunity to take advantage of this broader market rally, which they've missed out.
All right, so it's time for a quick break, and this discussion will be continued even after the break, where we'll be discussing about mutual fund report card in this calendar year. A question on Franklin India smaller cap fund. Even when this space was not performing, this fund was somewhere, if not the best performer, but then close to being the best performer. A very good, consistent, good performance in this fund.
I missed you. Is that
Franklin India smaller?
Yes. Janki, who's the fund manager of Franklin India Small Cap Fund, of course, he's a great fund manager, and the kind of fund manager stability which helps a person identify a scheme itself. Because if there is a person who's been managing a fund for long periods of time, especially over a decade, the predictive analytics help you understand the behavioral patterns of which fund will do well in which cycle. So Franklin Small Companies Fund, Janki has done a great job of getting this. And I think it's basically fund manager stability and experience in the same segment of the market. The same fund manager operating the same small cap fund brings in a lot of learning and self-correction, which is what I think Franklin is all about. And Janki, of course, is a great fund manager who's now recently been promoted to the CIO as well.
Feroze, before I move on to the other categories, let's just do a small discussion on mid-cap and small-cap space and the kind of returns investors must have seen. So, a period where there was non-performance in their funds, mid-cap and small-cap, and now bumper performance. Do you think it's time to hold on to your mid-cap and small-cap? Not talking about this particular list because it's just one calendar year that we are talking about. But if you've been holding on to a mid-cap, small-cap fund for maybe 4 years, 5 years, there's a sudden performance that you've seen. Should you be sticking on to that fund or just booking your profits and coming out of it?
This question would have been very easy to answer in 2017 because it was only domestic liquidity which was chasing these stocks. But today, the landscape is so different, Kavita, it just amazes me. We still define them as mid-cap and small-cap, but the same English words are being used to articulate what we are trying to refer to. But they are very, very different segments. India's small-cap, the largest stock in the NSE small-cap 250 is a 50,000 crore market cap today. Which is by any stretch of imagination, if you were to ask somebody what is the size of a small cap, he was definitely not going to tell you 10-12,000 crores. He's going to tell you that kind of a number, but 52,000 crores or 50,000 crores, give or take, is the largest stock. And if you look at the second largest stock in NSE small cap 250, it's about 35-40,000 KPIT. So as long as the top stock in NSE small cap 250. So point I'm trying to make is they're still called small cap by any stretch of imagination. A $3-4 billion company is not small cap. But be it as it may, the definitions don't change so easily, and I'm sure the regulator will redefine it in a more broad-based fashion. But coming back to whether should somebody own it or should he sell it, should he book profits? I personally think there is some more rally left for sure, because the kind of global money which is chasing Indian small caps is not funny. 2015, 2018, the number of FIIs in the smaller companies was negligible. Today, you see small companies having FII exposures which are at least in number very, very astronomically high. So if a foreigner is playing the India story using the small cap space, what kind of PE ratings have we currently seen? Will we again see a D-rating? I think unlikely, because if the election mandate is to the same government which capital markets love, you will see more rally, because foreign monies are not just participating in Nifty, they're participating in even a small stock of 5,000 crore market cap, which was not the case in 2018.
According to
so
you,
don't sell and drop your hat so soon is the point I'm trying to make.
All right, so broader market, most team left according to you. Let's move on to a FlexCap category. So the funds which have really performed well, were they more tilted towards mid-cap and small-cap?
Yes, like you rightly pointed out, Kavita, you leave me no point, which is actually the great thing. So I get a breather. JM FlexiCap and Parag Parikh FlexiCap, of course, their large cap exposures have been smaller relative to the average. I think that's played out beautifully. Again, Axis FlexiCap and UTI FlexiCap with a large cap exposure, they're closer to the Nifty performance than the mid cap and small cap performance. So I think in a FlexiCap, the call of having the right proportion is also as critical as much as having the right stock in the specific sector and the sector itself. So I think FlexiCap, because of the kind of flexible mandate it possesses, as the name suggests, the fund managers are able to create a larger difference. Now, if you see the difference, it's more than twice. 35 is the largest best fund, and the worst one is 16. So this tells you the disparity in this category is more. Larger the flexibility, larger is the disparity. Larger is the need to pick the right fund, and that's where your distributor comes into picture to be able to get you closer to the 35 than the 16.
Multi-cap, which is a tricky category as per exposure across market caps, which have been the best performers?
Yes, HDFC Multicap is the best performer in terms of the multicap category. If you look at Nippon India Multicap, that's also done beautifully. SBI Multicap is again in the worst category of the last two. Active, Quant Active is another worst fund. It's about just 19%. I can definitely spare Quant for its bad performance, because that was just some degree of mean reversion. It has delivered such kind of stupendous returns for the previous 3-4 years that it had the right to actually take a little breather and relax. And I think that's what Quant has done. It's not a systemic change in performance. It's just a structural mean reversion.
Any specific stock selection in HDFC Multicap and Nippon India Multicap that really worked for them?
Yes, I think multi-cap, like it's reasonably restrictive, because in a multi-cap category, the fund manager needs to have 1/4 in each of these categories, large, mid, and small. Only the 25% is at the discretion. This disparity is largely because where he used the other 25%, and also the stock picking and the sector picking skill of the fund manager. Last year has been a great year in terms of divergent sector performance and divergent stock performance and divergent segment performance. On all the three dimensions of the equity market, you have seen very large disparities. In a disparity, you see that there is a difference between a great fund manager and an okay one, more apparent in a year like last year. If everything is doing well, you can't spot the best guy. If everything is doing badly, again, you can't spot the best guy. If there's divergence of this quantum on all dimensions, is when you can know what metal each of them have. And I think HDFC has proved that, and so has Nippon.
All right, so I think we are done with equity categories. Now let's talk about hybrid. And I think the first category is aggressive hybrid funds.
Yes, aggressive hybrid funds. Again, here you see the divergence, because aggressive hybrid also gives you a lot of flexibility to the fund manager. Here you see one fund which has delivered 32% return, 31.77, which is Bank of India. Bank of India mid-cap and small-cap and debt fund. And there is another fund which is an Axis hybrid fund which has given 11%. So the difference between the worst one and the largest one is 20%, almost 3 times more is what the best one has given in relation to the worst one. So more the flexibility, more is the divergence of performance. That hypothesis gets proved in this category even further. And I think Axis again appears here the third time in the worst category, and none have so far appeared in the best category. Again, substantiates why. Because they had gotten into a redemption cycle which they've not been able to break through after the little fiasco they had in terms of the news and exigencies they had in their business.
Exactly. So clearly mid-cap and small-cap management working over here in aggressive hybrid also. But then balance advantage, how do you think they have fared?
Balance advantage again has fared okay. Balanced advantage helps you or promises a retail fund manager, retail investor is I think it's largely pointed towards a retail investor who's not doing asset allocation at his level and wants to delegate this responsibility of asset allocation to a fund manager. And